Hello and welcome to Trading 5 Talents. A few weeks ago, I ran numerous backtests on a simple concept of simply going long on SPY. And you can see the chart here from 1993 to present. So I tested out a few different long strategies of SPY, and those included just simply buying shares of the ETF or buying calls or entering into call debit spreads or going short on put spreads. So all of these are long positions and have a bullish sentiment on SPY. And from these backtests, I concluded that a very simple strategy of buying 45 DTE calls on SPY, those produce the most balanced results. And specifically a 45 DTE 40 delta long call with an exit at 25% profit or 20 days until expiration and no stop losses. Those results seem to perform the best. So after 1 year, you can see here it had about a 75% return. Over a 3-year back test, it looks like it had a 193% return. Over 5 years, almost a 400% return using this simple strategy. And then for a 10-year back test, 500% return. But then when I set it to an all-time back test period, which is about 16 and a half years using option alpha, you can see that the returns are very bad. So you're pretty much blowing up your entire account, a negative 97.6% return. So what happened during this period to cause this? As I mentioned in the introductory video for this particular strategy, what happened here was this housing bubble or the housing market crash of 2008. That wiped out the account so that the strategy could no longer profit from this bull run that happened immediately after. So if you want more information about how I tested these different parameters to come up with this simple strategy, then there's a video link in the description, so you can check that first video out. So with that information in mind, I ran over 200 more backtests to try and solve this issue while keeping a very high return. And here is the raw data from all of those backtests: 1 year, 3 year, 5 year, 10 year, and then the all-time, which is about 16 and a half years. So in this video, I want to show you a very simple adjustment that can turn this backtest into this one right here, and you can see there is a nice positive return. So coming back to the raw data set, there are 210 backtests that I ran, and I am looking at the win rate, the return on capital, the max drawdown, and the total DIT, which is the days in trade. And what I'm changing with each of these iterations is the DTE to close, as well as the profit target. And I'm testing those iterations over every backtest period that I can using option alpha. So if you don't know what option alpha is, it's a platform that you can make options trading bots, and you can backtest them, and of course you can put them in a live account as well, and you can forward test them using a paper trading account. So that's what I've been talking about in my videos for, I don't know, almost a year now. So if you want more information about option alpha, I have several videos on my channel. There's also an affiliate link down in the description if you want to check it out for yourself. Now with each of these iterations, the entry stayed the same. So that means I entered a 45 DTE 40 delta long call on SPY every Monday of every week. So one thing to note, if you were to look at all of the backtest data here, is that every single iteration produced a positive P&L over all the time frames tested except for the 16 and a half year backtest, the all-time backtest. And in the all-time backtest, only a handful remained positive. There's only a few iterations that actually survived that housing market crash of 2008. So what I did with all of this data is I wanted to find the, quote, best iteration. And, when finding a trading strategy, best is very subjective because every trader is going to have a different risk tolerance and different expectations for their strategy. So what I did was implemented a scoring system, sort of like what I did in my previous introductory video for this strategy. However, this scoring system is much, much simpler. So the first step I did, first of all, let's just look at the 1 year. That's the first time frame. So these are all the 1 year results right here, just filtering out. And then what I wanted to do is I wanted to look at the win rates that are over 70%. So filter by condition, and I want greater than or equal to 70%, which is 0.7. And so you have all of those right here. Okay, so everything that won over 70% is shown. And then I wanted to look at the top half based on the return on capital. So basically these right here. So I'm going to sort these, return on capital. And so my top ones are at my highest returns are at the top and my lowest returns are at the bottom. Now I just want the top half. So you can just simply count right here, and you can see down here that the count is 28 down here. So that means I just want the first 14, and that's 13, that's 14. So these ones right here are the ones that get a point in my, point system. So I did that for the 1 year, the 3 year, the 5 year, the 10 year, and then the all time. So each of those that fit this criteria got a point. So the second thing I did, I kept the win rate the same, except, so finding those that have 70% win rate or greater, and then I sorted them by the max drawdown. So here I want to sort like this. Oh, I did it backwards. So here, right, like this. So the max drawdown, negative 16%. So that is the lowest drawdown of this particular strategy, all the way down to negative 32%. So I want the ones that have the lowest drawdowns. So I'm going to take, again, there's still 28 because I'm filtering out by win rate. So I'm going to take the first 14, which would be right here. Okay. These right here also get 1 point. And again, I did that for the 1, 3, 5, 10, and 16.5 year back tests. And then I totaled all the points. And what I found was that there was a tie for first place. That's shown here in this tab. So I also made it a little bit visual by color coding them. It's just easier to see. So a few things we can learn from this particular tab right now. So everything that is green, that is a 1 point on the iteration scoring system. So 1 year is in this row, 3 years, 5 years, 10 years, and 16.5 years. Then I have the iteration parameters up at the top, the DTEs, and then the profit targets. So for example, if we look at this one right here in column Z, so exiting at 15 DTE and then a profit target of 25%, it got 1 point, 2 points, 3 points, 4 points. So it had 4 points based on the ROC. But down here, when we look at max drawdown, you can see it only had 1 point. So the total is 5 points. So what I am doing is I'm looking for the best balance between the ROC based score and the max drawdown based score. And based on my filter, everything has a greater than 70% win rate. So I'm looking for the top ones that fit all this criteria, and I've highlighted them right here. These two iterations have a score of 8, which that's really, really good. They both scored perfectly in one or the other categories. So you can see this one had a 5 up here in green, and this one had a 5 down here in red. That means down here in red, this had the lowest drawdown across these years. Over here in green, this means it had the highest return across these time frames. So what are these iterations? Well, the first one is the 15-10, which means you either exit at 15 DTE or you exit at 10% profit. Over here, it's the 5-10. Either exit at 5 DTE or 10% profit. Okay, so if I were to pick between the 15-10 and the 5-10, my preference would be with the 15-10. And the reason is because of the drawdown issue. I think you're going to find that there is a little bit more returns with the 5-10 because you're in the trade longer. You give it more time to win. But just on my preference, I would rather get out of the trade earlier than to stay in it and, things turn against you. So let's take a look at the data for these two, the 15-10 and the 5-10. So if we come back here, let's clear this filter first of all, because we're just going to look at everything. And so the profit target for both of them were the 10% profit target, and the GTE was either the 5 or the 15. Oops. Okay, so right here. So over 1 year, the 5 is superior, better in ROC, better in win rate. It's slightly increased drawdown, but overall the 5 is better. If we look at 3 year, you can see the 5 is also better in ROC, better win rate, and lower drawdown. Over 5 years of data, we see that the 5 DTE is superior once again in ROC, the win rate, and the drawdown, it's about the same, but it is a little bit lower. If we look at 10 years, 5 DTE is a better ROC, has a better win rate, but now look at the drawdown, negative 32.5%. So that I don't like that. I'd rather have 8.1, negative 8.1 if I had to choose. And then if we look at all time, we can see that the 5 had about the same ROC, roughly the same win rate, but it had, again, greater drawdown. And I wasn't pointing it out, but you're going to obviously be in the trade much longer if you hold to 5 DTE versus getting out at 15 DTE. So because of the increased drawdown with the 5 DTE strategy and because of the longer days in trade, I would rather choose the 15 DTE and 10% target versus the 5 DTE and 10% target. But again, that's just personal preference. That's why I ran this test, because I just wanted to see what was at the top in terms of best. And then according to my risk tolerance, I chose the 15. Okay, if we come back here to the scoring summary, the one that I have over here in yellow is the one that I originally introduced in my long SPY video. And you can see how that performed. That only got a composite score of 2 versus these over here that had 8s. So how does this one compare to the 1510? So let's go over here and we want the 15 DTE and also the 20 DTE because that was the original. And the profit targets were 10% versus 25%. And so let's look at just the 1 year and we can see right here. All right, so what we're looking at is the 1510 versus the 2010. I'm sorry, we're looking at the 1510 versus the 2025. Right, those are the two that we're comparing. And you can see with a 10% target, the ROC is better with that lower profit target. So the 1510 actually performed better in terms of ROC than the original 2025. The win rate is better, the max drawdown is better. All right, if we look at 3 years, what happens? So 3 years, we're looking at this one, the 2025, and then the 1510. And what you can see with the 1510, the ROC, it's about the same as a 25% target, but the win rate is significantly higher. It's almost 80% versus 70%. And of course, the drawdown is lower, and the days in trade are a lot lower with a 10% target. All right, let's look at 5 years. So we're comparing the 2025 and the 1510 right here. And you can see the 2025 had a higher ROC. The win rate is lower. So the 1510 has a better win rate, and then the max drawdown is better with a 1510. So yeah, you're giving up a little bit of the gains, but you're not staying in the trade as long. You're not going to be losing as much over this testing period. All right, let's look at 10 years. So we're comparing the 2025 and the 1510 right here. ROC, better with a 25% target, but you have a lower win rate, and you have a much larger drawdown. Look at this, negative 35% versus a negative 8%. So of course I would choose, again, this is personal choice, but I would choose the 1510. And then finally we come to the all-time testing period. 2025 versus the 1510. Here's where you see a real difference. With the 1510, all-time, 16.5 years, you have about a 460% return, 80% win rate. Drawdown is huge, negative 65%. All right, with the original 2025 that I introduced, this is the one that blew up during the housing market crash. You lost all of your money. Win rate was only 50%. So if I were to move forward with this strategy, then I'm going to be choosing the 1510. So I am currently running this strategy in a paper account using this bot that I made here on Option Alpha. I don't have any closed trades yet. I have 3 that are open, but they just haven't closed yet. So if you've been following the markets though recently, you know that the last few weeks, have not been the best time to start a long SPY strategy because the markets keep going down. So in an upcoming video, I'm going to share an idea that I have that I think will keep the strategy running during bull runs, but then also shut the bot off when there's an expected downturn. So be sure to stay tuned for that video. Be sure to subscribe so that you can be notified when that one comes out. In the meantime, trade wisely and take care.